Markets break free. Can SP 500 and NASDAQ keep climbing? When we compare BTC and ETH prices, we observe that Ethereum's returns have been underwhelming compared to Bitcoin. There are a few reasons for this. Firstly, Bitcoin is seen as a more established asset and is often considered a safe haven by investors. This boosts demand for BTC, especially during uncertain market conditions, giving it a relatively stable performance compared to ETH. Secondly, Ethereum faces ecosystem-specific risks. For example, the ETH network is deeply tied to DeFi projects and the NFT market, which might make investors more cautious before a potential upward move. Another significant factor is the high gas fees on the Ethereum network. This has pushed developers to create new projects on alternative blockchains like Solana, which offers faster transactions and lower fees. As a result, many new projects on the Solana network have gained popularity and wider acceptance among users. For Ethereum to initiate a strong upward trend, a major catalyst might be required, such as a network upgrade or the success of a large Ethereum-based project. At the moment, ETH appears to be at a critical juncture where its internal dynamics and competition from alternative blockchains like Solana will determine its future performance. Looking at the heat map, we can see that the area between the 102K and 106K levels, as highlighted by the red arrow, appears to lack significant order flow. If spot buying continues when the markets open, we may observe upward pump movements toward the 106K level. However, for this scenario to play out, the 102K region needs to hold as a solid support level. If the 102K support holds, there is a high probability of further upward movement. However, once we reach the 106K level, we face another challenge, a strong resistance around 110K. The 110K level will likely serve as a critical resistance point. The market's ability to break through this resistance will largely depend on key announcements made after the president officially takes office. These announcements will likely play a decisive role in determining the next market direction, whether we see a continued move upward or a rejection from this level. After Bitcoin managed to break out of its downtrend, we saw a similar breakout in the downward trends of the SP 500 and NASDAQ indices. Although there appears to be some negative divergence in the ES 500 and NASDAQ charts, both indices are continuing their upward movements for now, suggesting that market participants are maintaining optimism despite underlying warning signals. From a broader perspective, this resilience may reflect the market's anticipation of potentially favorable development, such as a softening in monetary policy or stronger than expected earnings in certain sectors. However, there are a number of key factors and upcoming events that could shape the direction of these indices going forward. One of the major influences on equity markets at this stage is the trajectory of U.S. 10-year Treasury yields. Should these yields continue to rise, the increased cost of capital may exert pressure on valuations, particularly in high-growth sectors like technology. Historically, higher yields tend to make equities less attractive compared to fixed-income instruments, which could weigh heavily on NASDAQ and other indices that are more sensitive to interest rates. Additionally, economic data releases such as inflation figures, labor market updates, and GDP growth projections will play a pivotal role in shaping investor sentiment. The Federal Reserve's policy direction remains at the forefront. Any unexpected tightening in response to persistent inflationary pressures could introduce renewed volatility and risk-off sentiment. Corporate earnings and guidance will also be key drivers. If forward guidance reflects a weakening macroeconomic environment, it could lead to reduced confidence and increased profit-taking, especially after the recent gains. Moreover, geopolitical events or unexpected shocks could disrupt market momentum, highlighting the need for vigilance. In summary, while the recent trend breakouts in SP 500 and NASDAQ are encouraging, there are significant headwinds on the horizon. Market participants should closely monitor Treasury yields, upcoming Federal Reserve communications, and macroeconomic data for signs of a potential shift in market dynamics. A continued rise in the 10-year yield could dampen equity market sentiment, potentially reversing the upward momentum we are currently witnessing. For now, caution is warranted despite the current upward trajectory.
Thank you for watching. Subscribe.